Welcome back, investors, to the Investing with Our YouTube channel for another portfolio update. This week's video will be summarizing the second week of January, and we ended last week on 134,911, and we end this week on 132,653 for a 1.6% loss, which equates to £2,258. So not a great week, but you saw a lot of fight from the portfolio as it dipped and it recovered, dipped, then it recovered, and it ended up on a dip in the end. But this gives me confidence that there will be a recovery within the portfolio going forward because it's testing a lot of the weekly highs. Now, if you look at the overall gain-loss chart for the week, you can see that there was quite a lot of red, as you would expect for a losing week, with the big ones being Grab, which is seeing a little bit of a sell-off, but they've got earnings coming up soon, so let's see what happens with that. And then we had Carnival Cruise Lines, which there was no real news, but there was a bit of a sell-off. So for me, this could potentially be a buying opportunity because the fundamentals of the business hasn't changed and management have guided for a double-digit growth for this year. So this is actually not necessarily a bad thing, and it signifies a bit of profit taking within the market because it's had a good year. And then you have MasterCard at 6.14 and Visa at 6.11, which is reacting a little bit negatively to the Trump announcement that he wants interest rates for consumers to be capped at 10%, which is something that affects banks more, but it also affects payment providers like Visa or MasterCard because there's going to be less potential spending. But this is something that is getting a lot of pushback from the market because people are saying, well, how are you going to exercise this? Is this possible? So it might be one of those things that Trump has said and then later goes back on. The main winners of the week were ASML, which has had a fantastic run. So if you look at from the end of December, it went up 1.7%, 8.6%, 9.49%, and now 6.56%. Fantastic results. As you can see, the current share price is $1,358, which is had a phenomenal run, up just under 80% for the last year. I have a very small position, and my average price is $831, which means I'm up just over 60%. But I remember pretty much over the summer, every video I was wondering why this stock was down. It's such a strong, solid business. So if you were able to buy during those dips, you're doing very, very well right now. The reason why it's such a small holding is because I have other semiconductor companies within my portfolio, and I didn't want to put too many eggs in my basket. And I have companies like Nvidia, Broadcom, which make up a decent size of my portfolio. That's one of the reasons why my holding within ASML is quite small. Now, in similar vein, one that is outperforming even ASML is KLA, up 11.99% for the week. If we look at KLA, we're at $1,567 per share, and we're up over 100% for the last year. Again, for the same reason, I have a very small holding because my other semiconductor stocks within my portfolio, but this is another one that is proving to do very, very well. But the company that has had the biggest return for the last week was IREN at 26.55%. What a phenomenal performance. And if you can see, similar to ASML, since mid to late December, up 0.87%, 0.53, 6.63, 9.46, and 26.55. So we're seeing a very, very solid recovery on this stock. If you look at the last month, we're up 72%. So it's a very, very strong recovery. This is a company that I'm bullish on, and I added it late last year and then went through a decent sized dip. I'm still down on the position, just over 11% right now, and we're going in the right direction with this company. So I'm really, really happy about that. Now, if we look at the overall profitability within the portfolio, we can see that I have more green than red, but the red is BM&R, which is down 44.5%. There was a presentation by BM&R to shareholders, its first one since its inception, which happened on Thursday, which I watched, and I was pretty impressed by it. There was a bit of a questionable investment from BM&R in Mr. Beast's company of 200 million, but Tom Lee, who is the head of BM&R, explained, well, it's going to give us so much exposure. Mr. Beast's video watched by about 1/3 of the global population that has internet. So the reach that this company has is going to result in the company growing. and I believe BM&R has around a 5% stake within that company right now. HIMS, now this is one that is, as I mentioned earlier, could be cut from the portfolio. So they have earnings coming up on February the 23rd, and if the company doesn't provide good solid guidance, an uptick in revenue, then this might be cut. If we look at the weekly profit and loss, look at this red. If you look at essentially from the beginning of December, every single week has been red, and these are reasonably significant: 5%, 4%, 4%, another 5%, and yeah, the market's not liking it at the moment, and we shall see how their earnings goes. Grab down just over 25%. This is one I haven't owned for long, so I'm going to give it a bit of time to see how it goes. Now, if there is a trimming or cutting of certain stocks within the portfolio, one particular one I mentioned last week is Micron, which is one that I would like to potentially add to the portfolio. And we saw some activity from one of the directors called M. Lu Tayin, and he bought just under $8 million worth of shares last week. Now, insiders within companies sell for a lot of reason, just to, make additional income. So it's not always a thing that you look out for. But when they make a purchase, that's usually when you think, hold on, something is happening within this company. And this is quite a significant purchase of just over 23,000 shares. So this is a bullish sign. So if I do end up cutting certain stocks, Micron is high up on the list, but I'm a bit concerned that it's had a very big run, 243% up in the last year. So I'm going to be buying at the top. So this, I don't like to do that potentially, but there are analyst ratings where they're pricing it in to be, 400, 450 plus on this stock. So one to consider. The next one is IREN. And as I mentioned earlier, it's had a very, very solid run. And this is one that I'll be keeping. Who knows, maybe potentially adding to this one as well, because it's a very solid business in a very desirable space, which is data centers, which is going to be a big requirement going forward. Robinhood, a company I'm very bullish on. We're down at the moment, but this is one that I'm confident in. Not going to be trimming, if anything, adding. So this is just a wait game. They too have earnings coming up in February, so let's see how that goes. United Health, down just under 5%. This is the company that Warren Buffett bought before he retired, and he's generally a long-term holder, so I'm going to be doing the same with this one as well. Oscar Health up just under 1.5%. We've got £72 gain. Then we've got Meta at a £200 gain, which is up just under 2%. This is going to be a recovery play. This is the one I believe, very similar to Google, which I bought a lot of over the last year. I think if you look at the PE ratio, it's under 27, which I think is a bit of a bargain, similar to where Google was. So this is one I will be holding. MasterCard and Visa up £230 and £350 respectively. Have not fared well with the Trump 10% announcement, but these long-term are very solid businesses and monopolies within their area, so should do okay in the long term. Costco up just under 20% for a £390 gain. ASML doing phenomenally, even though such a small holding, up almost £450. Apple up £460 for a 28.79% gain. KLA up £539. Microsoft up £873. And Amazon, which is one that is potentially going to be coiling up to have a good year, up just under £1,000. Then we get the first stock, which is up over £1,000, which is Centrica, which I'm up 63.5% on. Then you've got Nvidia, up £2,500. And I think the AI boom, or the needs for GPUs, is going to continue at least for the next year. So this and Broadcom, which I'm up another £2,500 on, maybe ones that I add to, because they are under 5% holdings within my portfolio each. And Broadcom's had a bit of a dip, so it makes it a bit more appealing to buy. Yeah, this is all food for thought. Then you have Tesla, which I'm up £3,000 on, getting close to the 100% mark. It has gone past the 100% mark at times, but at the moment it's just a little bit below. And we're seeing solid signs of potential full self-driving hitting the markets at a widespread scale. And this is where this company is going to do really well. Elon announced that in mid-February, you won't be able to buy full service driving for a one-off fee. It's going to be on a monthly subscription. And now, if you think about it, if that's rolled out on a wide scale, we're talking about 80+% of margin, because it's just a piece of software that you can just send out. It can turn off and on depending on whether you buy it or not. And this drives huge revenue and huge profitable revenue for the company. Then you've got Imperial Brands, which I'm up over £3,000 on. A solid performer within my portfolio and a big dividend payer as well. So that's performed better than I thought, to be honest. And you don't see it in many portfolios, but it's been a staple of mine since I've started investing, where I was a dividend focused investor. And this is one of the few that has stayed in there due to its dividend. And more importantly, its growth that it's brought up. So we're up just under 69%. If it didn't have that growth in tandem with the dividend payments, it wouldn't have stayed within the portfolio, but it's there on merit. And then you got Carnival, which surprising is number 2, up over £3,500. A recovery play from pandemic, where it had to take on a lot of debt, and it's now paying this off, and it's becoming profitable enough to actually reinstate its dividend. And I should get a dividend from this company, I believe, in February or March. So this is a company that's really doing well in the portfolio. And the biggest one up just over £9,500, where the profit is actually bigger than the actual holdings within the rest of my portfolio, is Google. And this is, I mention it every single week, where it is something I was very bullish on. Similar to Meta, was at a low PE, under 20, and I bought a lot of it, and I've done really well. And this is an absolute juggernaut of a business. It dominates search. It has YouTube, which is watched more than Netflix. Its ecosystem, it has Google Maps, which is a free service, but I use all the time, and I would pay for that. So things like that. And even last week, you saw Meta choosing it to underpin its Siri service. It's just operating so well on so many levels. So I'm not surprised by this. And I have been trimming. So I had 100 shares at one point. Now I have just over 80. And I'm going to let it ride for a bit now. I think the company is going to continue to do well. Would I buy it at this point? At 32 PE? Yeah, why not? I mean, it's not ideal, but then you're buying a very solid business. And 32 is not that expensive. It's not as good as under 20, but it's not that bad. So that's it. Thank you very much for joining me on this portfolio update. If you enjoyed it, give it a quick like. Subscribe to follow my journey, where I show in a very open way how my portfolio is doing. I will see you on the next one.